Hello, investors. Welcome back to S&P Stocks Deeper Analysis series, where we offer you a more detailed understanding of your investments. In our last episode, we explored the fundamentals of Google. Today, we're excited to present the second episode of our series, in which we'll be conducting an in-depth analysis of another major player in the tech industry, Microsoft. Through deeper analysis, we aim to provide you with a comprehensive overview of a company's financial performance, competitive position, and future prospects. We'll explain the key metrics that contribute to our analysis and offer you insights into our decision-making process. At S&P Stocks, we understand that investing in the stock market can be complex and challenging. That's why we're committed to providing you with the knowledge and tools you need to make informed investment decisions. Before we start, please remember that this video doesn't cover every single aspect of our internal analysis. That said, let's start exploring. For those who are new to our Deeper Analysis series, we always begin each episode by explaining S&P Stock's typical approach to stock analysis, before applying these concepts to the company being analyzed, which is Microsoft in this case. So, one of the analysis concepts that we use is the technical analysis, a metric with an impact that ranges from 5 to 10% on our final analysis. Technical analysis is the study of historical price data and various patterns to predict future price movements. It's important because it helps us identify entry and exit points for trades, as well as potential trend reversals. The weight assigned to this factor reflects its role in supporting our overall decision-making, and at 5 to 10%, you can see it's important, but far from being the primary driver. Then we have sector performance. Accounting for 5 to 15% of our final analysis, sector performance involves examining the performance of an industry or sector in comparison to the broader market. It's crucial because strong sector performance can indicate a favorable environment for a company to grow and succeed, and provide solid context for a stock's potential growth. The next factor is speculation and risk management, where we assess the level of speculation on a certain asset and the risk associated with that particular investment. This factor weight ranges from 10 to 20% of our final analysis, and it's important because it helps us determine whether the potential returns are worth the risks involved. By carefully managing speculation risks, we can make more prudent investment decisions and help our clients to protect their portfolios. Our fourth factor is market news and sentiments. Representing a significant 20 to 30% of our final analysis, this key metric involves keeping abreast of the latest news, events, and market sentiments that could impact the stock's performance. It's vital because external factors and market psychology can influence a company's share price, sometimes even more than its financial performance. The weight assigned to market news and sentiments underscores its importance in helping us stay informed and respond to changing market conditions. This factor is usually assessed together with speculation issues. Last but not least, we have our favorite, the fundamental analysis, which weighs 50% or more in our final opinion. For us, it's by far the most crucial factor in our decision-making. This metric involves evaluating a company's financial health, business model, competitive landscape, and other aspects that drive its long-term value. It's essential because it allows us to determine whether a stock is overvalued or undervalued, and whether it has strong growth potential. By focusing on a company's fundamentals, we can make more informed, long-term investment decisions that contribute to portfolio growth. Now that we've introduced the key metrics and factors, let's dive deeper into our analysis of Microsoft. As mentioned earlier, the first metric in our Deeper Analysis series is technical analysis. Although this method can be quite extensive, we'll focus on the most relevant aspects. In this case, we're examining the moving averages, or MAs, represented by the blue, pink, and yellow lines. These MAs help us understand the stock's trend based on its past movements over specific periods. We're using the MA 20, 50, and 100, which focus on the last 20, 50, and 100 days. This helps us gauge the stock's short, medium, and long-term trends as bullish, neutral, or bearish. For Microsoft, the short-term trend appears bullish, with support at 290.1 and resistance at 306.4. The stock is likely to fluctuate between these values and will need to break either boundary to form a new pattern. However, as you can see, Microsoft has just crossed the resistance line, which could be an indicator that it will test this value a few times and might go up if it doesn't fall below 306.4 in the next days. But please remember that this is from a solely technical perspective. The midterm trend also seems bullish, with a very lower support at 239.7 and a higher resistance at 331.6. A very high value that we couldn't even place that line in the chart, since it's more than 40% above its value in January. The long-term trend appears bullish as well, with support at 262.8 and resistance at a high level of 324.6. While other technical analysis techniques like Bollinger Bands and Fibonacci retracement are part of our internal analysis, we believe these trends overviews are the most relevant for this video. Considering all factors, our rating for Microsoft stock from a technical analysis standpoint is somewhat neutral, and we've given it an A. In this particular case, you might ask, well, all right, but if every trend is bullish, why not an A+? Well, two things here. First is that, as mentioned before, there are also other analysis techniques that our team takes into account for technical analysis. And second, we believe that the stock hiked too fast this year, and this is a yellow flag in our opinion, even when speaking from a technical perspective. Next, let's discuss sector performance, focusing on the technology sector in this case. For those who've watched our Google Deeper Analysis, you'll see that both analyses are very close, since both companies belong to the same sector and there were no relevant changes in the last 30 days. So, what we considered here is that in recent years, the tech sector has been performing well, leading to high expectations. The market anticipates a yearly growth of 21% over the next 5 years, which raises concerns for us. As a result, despite the sector's strong performance, we rate it as a D- at this time. This projected 21% growth is closely linked to our speculation and risk management factor. We believe this expectation may be causing overpricing in several stocks within the sector, including Microsoft. A curious fact here, especially for those who watched our Google Deeper Analysis, is that we said in that analysis, on a positive note, Google stock has already experienced significant losses following the release of ChatGPT, which suggests that speculation might not cause further substantial damage. And now for Microsoft, it's exactly the opposite when taking ChatGPT into account, since the stock has already hiked more than 40% this year and had a substantial boost when the chat was launched. So, taking all speculation and risk management factors into account, we must emphasize that, for us, Microsoft stock is too expensive at this moment, which is a clear sign of speculation. Therefore, we rate Microsoft stock as a D in this area. Moving on to market news and sentiments, this is a crucial factor in our analysis, even when there are no significant positive or negative events. It helps us gauge the market environment, at least in the short term. For Microsoft, as well as we said for Google, we believe the most relevant news at this moment revolves around ChatGPT and the artificial intelligence competition, where Microsoft seems to be ahead of competitors like Google. This has led to the integration of AI with Bing, Microsoft's search tool, which historically underperformed compared to Google. However, after this integration, there's even a waiting line to use the new Bing. Also, there's the Activision Blizzard acquisition event, a $69 billion deal that's not yet defined, since the UK authorities are making things difficult for Microsoft. So, for now, what we can say here is that usually when mergers and acquisitions take place, the company that's being sold tends to increase its value. At the same time, the other company tends to have a decrease in the price, since the next periods tend to have less available money for profit distributions once it was spent on the acquisition. Last but not least, there's some considerable buzz in the media about the extremely poor valuation figures of Microsoft, which we'll confirm here in our fundamental analysis. When several articles start to pop on the internet talking about something like extremely poor valuation figures, it's surely a yellow, if not a red flag, especially when the articles are correct, which is the case. Despite not being a complete disaster, the overall sentiment of these items appear extremely negative for Microsoft, and our rate here was a D. Finally, as many of you already know, we arrive at our favorite metric, fundamental analysis. For those familiar with our 1-minute analysis, you'll notice that we've included additional metrics here. However, it's important to remember that although these metrics are essential and helpful for decision-making, there are countless other metrics beyond them. Microsoft has excellent financials, profitability, and EBITDA sales. Its sales growth is fair, earnings growth is good, earnings quality is excellent, and now we come to the red flags here. extremely poor PE and PB ratios, and an even worse EV sales. And last, the company holds some fair potentials. As shown, Microsoft's fundamentals are very strong, with the exception of valuation figures, and they're in very bad shape. For this reason, we rate Microsoft with a B from a fundamental analysis standpoint. And if the valuation figures were only poor, we might have rated the company with an A or even an A+ here, since the company itself is doing great. But, as you know, speculation can really spoil some investments, and as we've emphasized earlier in this analysis, Microsoft stock seems to be a lot more expensive than it should be. In summary, our deeper analysis yield the following ratings: A for technical analysis, D- for sector performance, D for speculation and risk management, D for market news and sentiments, and B for fundamental analysis. Taking into account the varying weights of each metric in our analysis process, our final rating for Microsoft stock is a C. Following our standards of providing a straightforward conclusion after an extensive analysis, here's what we have. In our view, the risk associated with Microsoft stock is medium to low, and this medium here is associated with the high speculation at the moment of the stock. Our current consensus for the stock is a cautious buy. And here we must emphasize that we're being kind of aggressive, believing that even with a serious speculation issue, there's little more room for the stock to grow. However, conservative investors should stay away from the stock at this moment. Also, those conservative ones that are holding the stock with profits at this moment might consider cashing out the profits and selling the stock. Once again, we'll share something typically exclusive to our clients, but for these first few episodes, we'll make it available to everyone. Our current average target price for Microsoft is set at $331. For those seeking more information, such as the fair value of the stock, high and low target prices, as well as easy-to-understand reports featuring even deeper analysis of over 3,000 stocks, we invite you to visit our website at www.spstocks.com. Join us to gain access to valuable insights to make informed investment decisions.